Hi everyone, welcome back to Mark Larson of Lee& Associates Real Estate Insights Weekly. At Lee& Associates, we're continuing to see strong transaction activity throughout the commercial real estate markets. Today, I want to talk about Jack in the Box, and more specifically, the number of sales in the month of March. This report outlines several recent Jack in the Box retail property transactions across multiple U.S. markets, providing insight into pricing, cap rates, and investment trends within the net lease quick service restaurant sector. The properties analyzed are primarily single-tenant, triple-net investments, which continue to attract investors seeking stable income and minimal management responsibility. One notable transaction occurred in Huntington Beach, California, where a Jack in the Box property sold for $2,379,000, or approximately $1,075 per square foot. This asset achieved a relatively low cap rate of 4.80%, reflecting strong investor demand and the premium pricing often associated with coastal high-barrier markets. In contrast, a property in Kent, Washington sold for $1 million at a 6.50% cap rate, indicating higher returns associated with secondary markets. Another transaction in Bellingham, Washington closed at a 5.84% cap rate, while pricing details were not disclosed. Similarly, a Houston, Texas property traded without a disclosed price, but involved in institutional ownership in the QSR investment space. The report also reflects variation in building sizes, typically ranging from approximately 1,400 to 3,000 square feet, with land parcels generally under 1 acre. These smaller footprints are characteristic of QSR properties and contribute to operational efficiency and consistent tenant performance. Overall, cap rates in the report range from approximately 4.80% to 6.50%, demonstrating a spread driven largely by location, tenant strength, and lease structure. Lower cap rates in markets like Southern California reflect stronger pricing and lower perceived risk, while higher cap rates in secondary markets offer greater yield potential. In summary, Jack in the Box properties remain an actively traded asset class within the net lease sector, with investor demand driven by brand recognition, stable income streams, and predictable operating performance. So, if you would like available details or free valuation of your property, give me a call at 949-338-6895 or email me at mark.larson@lee-associates.com. Catch you next time for more data, deals, and a dash of drama in the commercial real estate world.